Hello and welcome. You're watching Business Plus. Breaking news coming in at the top of the broadcast at this point in time. The Supreme Court appointed panel on Adani has given sort of clean chit to the Adani group. And I'm going to read what the panel has suggested at this point in time. Remember, the domain experts have said that at first glance, there appears to be no price manipulation on part of Adani Group. Remember, market regulator SEBI is also independently investigating the Adani Hindenburg issue after short seller Hindenburg came up with a scathing report on Adani, and Adani lost millions in fortune. All companies tanked, all of their shares took a beating, and at this point in time we are given to understand that the Supreme Court appointed panel of experts has sort of given a clean chit, Rakesh.
Yeah, Shweta, I mean, the Adani story refuses to go off the headlines, you know. We discussed that yesterday, and now the Supreme Court update has come. I thought it was July 12 when they were going to public with this, but maybe, you know, I got the date wrong. So this has happened today. What we know as of now is that this panel, which comprised some top names, KV Kamath, OP Bhatt, former SBI chairman, and, you know, Nandan Nelikani, and two judges, which and led by Justice Sapre, which has given this report. So I have a quick copy from the PTI which I would like to read. So to my mind, there are two key takeaways, Shweta, in this. One is that it says, it was not possible to conclude if there has been regulatory failure on stock price manipulation allegations.
Right.
If I read it correct, you know, I don't know how you read it, Shweta, but it looks like there is a little window, you know, that it doesn't, you know, summarily conclude that, you know, there was not a problem. So it says that it was not possible to conclude if there has been regulatory failure on stock price manipulation allegations.
Right.
So the remit of the report you were reading to me just now, basis that remit, it says that they have not been able to conclude that there was a problem.
Right.
The other line, which is very important from the PTI copy that I have in hand, is that, you know, it says that the Indian stock market as a whole was not unduly volatile post January 24. So that was one of the key criticisms, that, you know, post this report, that there was undue movement on the stock market, which resulted in huge losses. So to that extent, that's a very, very definitive observation or conclusion by the expert panel.
So basically saying that it wasn't a result of Hindenburg report, the volatility that we saw in the market.
I mean, if they don't see that kind of volatility which all of us saw, if that volatility, they're not linking to some undoing or some, you know, some illegal practice at the back end by the company involved, then it would amount, if we can say, to a clean chit on that count.
Okay. So let me quickly examine the remit, the three issues that the committee was looking into. Number one, minimum public shareholding. Number two, related transactions. And number three, price manipulation. Those were basically the allegations that Hindenburg report had levied on Adani Group. And at this point in time, committee and the key findings of the committee that are now being reported everywhere, we don't have a copy. Let me clarify that.
It's a developing story.
It's a developing story. We don't have a copy of the report at this point in time. Remember, the report was submitted to Supreme Court in a sealed envelope. So what we are given to understand, what we are hearing right now, is what is being reported in the media. No pattern of artificial trading or wash trades among the same parties or multiple times was found. No coherent pattern of abusive trading came to light. No violation found on minimum public shareholding investments from related parties. No finding of regulatory failure regarding minimum public shareholding. And the committee has stated at this point in time that it is not able to prove the suspicions.
So, you know, I think the committee has given its report, and we are awaiting, you know, the ability to read the full report and decode the exact findings. But on the face of it, it is some number of relief for Adani, undoubtedly.
Okay.
And also, you know, the ball moves completely into the SEBI court now. So Supreme Court had done a two-tier approach when it was, you know, so to say, cited to try and look into this very, very major controversy that happened in the Indian corporate world. And actually, the whole world was looking at India.
Absolutely.
And how would we deal with this crisis?
Right.
So in that sense, the Supreme Court piece is there. It's a developing story. We'll have to look at the fine print, but on the face of it, it looks like relief for Adani.
It's a relief for Adani.
And now the ball is in SEBI's court, and SEBI will have to come clean in this case in terms of, one, the charge that it did not investigate or it did investigate.
Right, and there is a big cloud of confusion, and I want to come to that, but at this point in time, Adani Ports and Adani Enterprises are up 3%. Markets are yet to close. So markets there have reacted positively to the big development that is coming from Supreme Court.
I'm surprised that the report has been put out when the markets are on, which is quite unlikely.
That is correct.
You know, because normally all big ticket, you know, corporates themselves bring in that corporate responsibility. but I don't know, maybe there was, the court were going for some recess. So in that sense, I think this is some amount of relief for Adani's, but the game is not yet over, because there are charges, there are counter charges, there is defense, and the story and is right in the front of you. It hasn't, gone away from what we call the headlines.
Right, it is a developing story.
So SEBI's deadline we mentioned, August 14. It has the first cut. It is supposed to complete the probe. If it is not in a position to complete the probe, it will have to tell the highest court that why it is not being able to complete the probe, give a status report, and then possibly seek more time. But to my mind, reading the Supreme Court observations on the timeline, the SEBI would do well to complete the probe by then. Otherwise, there will be further charges that it's trying to delay it, and in the process not being absolutely clear about the due diligence that it is expected to do.
Right, and let me reiterate that Adani Enterprises and Adani Ports are up 3%, so stocks there reacting positively to that big development coming in from Supreme Court at this point in time. Remember, August 14 is the deadline. SEBI has got to submit its report on investigations that it is currently conducting, or it is set to be conducting, in the matter of Adani. It had asked for 6 months. It was given 4 months, from April 24th up until August 14th. Post which, if it needs more time, it may be given more time, but ball squarely now in SEBI's court to decide on Adani's fate and the fate of Adani Group therein. We will keep bringing more developments on that story.
I want to iterate, the kind of the composition of this committee.
That is correct.
Because it has some really, really credible
interesting
people.
and credible people,
credible
former
people.
SEBI chief
so
as well.
It's not, while the political game will play on this Adani story for foreseeable future till the elections are over. But, it's not easy, Shweta, to criticize these people and accuse them of having a bias. In fact, people like K.V. Kamath, O.P. Bhatt, Nandan Nelikani, even there are 2 independent judges, Bombay High Court, J.D. Deodhar. So, on that count, it would amount to some amount of relief for Adani's, and also some amount of closure for at least part A of the controversy.
Right, but also, Rakesh, the committee says that it cannot clearly state whether there was a regulatory failure. It could not prove the case. Now, obviously,
that puts a greater onus on SEBI, Shweta.
That is correct, yes.
So, actually, this particular committee, obviously it has some eminent people, but they're not exactly in a regulatory architecture. SEBI is in the regulatory architecture. So, SEBI is the best fit to explain whether these doings were right or wrong on behalf of the company.
Right. So it wasn't able to prove whether the suspicions can be translated into a firm case. We will keep tracking all those developments as and when they come in, but we're going to shift focus for now. More senior citizens are going big on small saving schemes. The budget moved to double the deposit limit under the senior citizen saving scheme to 30 lakh from 15 lakh rupees. Now, since the enhanced limit kicked in April, senior citizens deposited as much as 10,000 crore in that month, compared with the usual deposit of about 3,000 crore in any other month. Now, given the scheme is fetching an interest rate of up to 8.2% in June quarter, more citizens are queuing up at post offices. The elevated mop-up is expected to prop up collections under the National Small Savings Fund. So, good news there for the government, and of course, a great bonanza there for, pensioners, for retired people who are hoping to make an extra buck saving in the small savings fund. About to retire, absolutely.
Okay, no, on a serious note, I keep saying, why did it take 9 years for this government to do this? This particular government has been extremely proactive on managing the bottom of the pyramid. It's run really some interesting, ideas and innovations, the Jam Trinity, all that have changed the landscape when it comes to the bottom of the pyramid. But, and it also been accused, rightly or wrongly, of being pro-rich, short of crony capitalism. We just discussed Adani, getting its businesses multiplying manyfold in the last 9 years, acquiring new assets and businesses. So, the middle class, there's a strong view which is gaining currency in the 9th year of this government. We are just a few days away from the government celebrating 9 years. That in its urge to, catch the vote bank at the bottom of the pyramid, with a genuine effort to uplift the poor and, give them the next level. And also, so to say, be on the side of the capital, which, is not all that wrong.
It's
India
not
needs
wrong
private
at all.
enterprise.
Absolutely.
I mean, if it's done all in the right and transparent manner, it's the best thing to do. Because unless and until there is wealth creation. That's not, you can't otherwise lift people from the poverty level.
Professor Arun Kumar joining
Okay.
us at this point in time. Let's also get him on this interesting story coming in there. Professor Kumar, thanks very much for taking time out. I want to begin by asking your opinion of the fact that the savings in senior citizen schemes have sort of tripled from 3,000 crore to 10,000 crore on expected lines.
We have to be clear, these are actually upper middle class people. The poor don't have 15 lakhs of rupees of savings, and then to have another 15 lakhs of rupees of savings above that, that's only upper middle class. In India, if you look at the socio-economic survey of the Delhi government of 2018, then you find that they say that 98% Indians spend less than 50,000 rupees per month. Okay. Now, therefore, 98% cannot have 30 lakhs of rupees of liquid cash, which they can put in deposits. And even if you assume that people are putting in 15 lakhs of rupees and they're putting an extra 7,000 crores of rupees, that only amounts to about 5,000 people. So 5,000 people out of a population of 1.4 billion is really upper middle class. So this scheme has very little to do with poor or with the middle class. It's really a bonanza for the upper middle class because, their problem is that, after retirement, they need some stable return. And what was happening was that the bank deposits returns had come down. So they were in a fix and they were putting money into the stock market. The stock market was booming, but now the stock market has been rather unstable for the last about 7-8 months, I would say, or even slightly longer. So for them, this is a relief. For the upper middle class, for those who have considerable amount of liquid cash, for them it's a relief. And for the government, of course, government gets more funds. Government needs funds because the fiscal deficit is pretty high. The government has a plan to reduce the fiscal deficit. But, when you do the borrowing, then it doesn't lower the fiscal deficit. It's only a way of financing it. And maybe it's cheaper than going to the market. And that's why, government probably would benefit by having to pay a lower interest rate.
Okay, are you before I let my colleague Rakesh come in, are you suggesting only 5,000 people or an upward of 5,000 people are going to benefit from this?
That's what the numbers are. 10,000 crores instead of 3,000 crores means extra 7,000 crores. Divide that by 15 lakhs, that comes to about 5,000 people.
Okay.
Professor Arun Kumar, thank you for joining us on the show. I mean, you have a fair point about the three clusters, the very poor and the poor or the lower middle class, upper middle class. But, this is an interesting exercise for academicians. For even those 5,000 people in the first quarter, and this is the first quarter figure, we'll have to study these numbers. I trust you know it better than all of us, because you study economics much better than all of us put together. In that sense, even this particular do you buy this point of view that I raised, right or wrongly, that this particular government has been extremely, has put the Indian middle class, if we do a broad classification of lower middle class and upper middle class, out of its ambit. And this particular scheme is targeting the entire government, retiree corpus, both at the state and the central government level, which is a significant number. You would agree on that? In the 9th year, at least, they have a bouquet, because everyone who retires has a certain corpus. He has an option to invest it in a scheme which is safe, which is credible, and has probably the highest return. So in that sense, this should be extremely welcome. And
just to add to that, very, very quickly, Mr. Kumar, before you elaborate on that, the idea that the upper limit is 30 lakh. We're looking at anywhere between 15 lakh, which was the limit earlier, up till 30. Somebody may be investing 20. Somebody would like to invest 25. Then can you put a firm number to that?
No, we don't have that firm number, but the question is, what are the retirement benefits which you can put into this scheme? Now, the retirement benefit, even if you're earning, say, about 2 lakhs of rupees per month, you might get something like 35-40 lakhs of rupees, and how many people would earn 2 lakhs of rupees in the government? The public sector employment is roughly around 18-19 million. And of that, say, about 1/30th would be retiring. So it's not even as if the retirees are entirely putting their money into it. Some money may be put into it, but not all that much. So what I'm saying is that the benefit that goes to the upper middle class, the top echelons in the retirees also, To the others, I don't think there'd be that much of a benefit. Of course, theoretically, there's a benefit, but how many would be depositing, as you rightly said, maybe even 1 lakh or 2 lakh? So instead of going into fixed deposit, they would put 1 or 2 lakhs into this kind of fund. But I don't see that it's going to benefit very large number of Indians as such, because the government the employment in the government is only about 18-20 million out of roughly 450 million people. So even if you look at the private sector, how many private sector people would be able to invest? That's why I'm giving the total number that might increase by 5,000. Or if you say maybe people don't put 15 lakhs additional, even then I don't think the number would be maybe 10,000, 15,000, but not more than that. So out of a big middle class that's supposed to be there of roughly maybe 100 million, the numbers would be rather small as far as I can make out.
Well, I mean, Professor Kumar, this particular budget, to answer your question, I mean, I am not personally convinced about this 5,000 number. Even if it is 5,000, it's a good way to go up. Anyone who's getting richer by credible means in this country is most welcome, to my mind, if I can play a devil's advocate here. And also there are other schemes, the other post office scheme where the monthly income scheme was raised, Shweta, from 9 lakh to 15 lakhs. So, the government employees pool, which he mentioned at 18, 19 million, if you put the state government put together, it becomes even a bigger number. And if you bring in the private sector number.
Okay.
No. 18, 19 million is state governments, local governments, central government, and public sector.
Yeah, fair enough, Professor Kumar. But then the private sector also is retiring. And there is another scheme where the kitty has been increased from 9 lakh to 15 lakh. It's a joint account under the monthly income scheme, very popular scheme. And for all these years that I've been investing, for example, or many like me have been investing, the upper limit was 9 lakhs. So it has been raised to 15 lakhs. So another bunch of large government, private sector employees who have disposable income, hard-earned income, have another opportunity to come about. My worry and lament is not the number. My worry and lament is that why did it take so many years to do it?
Okay.
And again,
the point is that the funds are being shifted from fixed deposits into these accounts. The number of retirees putting in the money is not there. So the savings pool in the economy is not going to expand. And that's one of the points that is made often, that the change in the savings rate doesn't increase the savings pool. The savings pool is what is available to the government.
Yeah, I don't have the numbers right now, but even the FDs are swelling in the last quarter or 6 months because the interest rates have grown up. You're right about the stock market, retail investor coming down, but the investment flow into FDs has also increased. So in that sense, there are parallel options. There are parallel options, and look at them as buckets of hope and growth. So we can't deny that particular fact. My worry is that, why did it take so much time to do it? And why not from 9 lakh to 18 lakhs? If you could double 15 to 30, why did you only do it from 9 to 15 lakhs? It was a great occasion to do it to 30 lakhs. Yes, sir.
Point is that in 2012-13, the savings and investment rate had peaked at about 35-36%. After it's come down to about 30-31%. So the savings pool is not going up. The point is that, you see, what you require in the economy is a higher investment, because only through higher investment will you have higher growth. So what I'm saying is that these concessions on savings instruments doesn't raise the savings rate in the economy. That's the point I'm making.
I'd put in a poser to you because you have such a long experience watching the political economy. Do you buy the point that this particular government has not been as equally focused on the middle class, and now closer to the election year, it's trying to bring the needle back, and that's why this particular budget it happened, and like in 2019 interim budget, the income tax level was raised to 5 lakh for a free zero tax category, and also the interest burden where the taxation steps in for deposits was raised from 10,000 to 40,000. So do you see pivoting away from the lower middle class, bottom of the pyramid, and extra upper middle class or the rich to the middle class?
No, so there are different things that you have to see. One is the direct tax concessions. The other, the indirect taxes. The middle class pays more of indirect taxes than the direct taxes. And it's the direct taxes where there's been concession, but the indirect taxes have gone up. So the indirect taxes affect the consumption, So if you are, say, somebody earning maybe a lakh of rupees per month, and have 12 lakhs of rupees, you might pay 3% or 4% of direct taxes, but you pay about 10% as indirect taxes. So the burden is more on the indirect taxes. If you really want to benefit the middle class and the lower class, you need to lower the indirect taxes. So I'm looking at the aggregate picture. So while you have some money,
do you see any rationalization of rates on the GST? so that
No, I don't see that. I don't see petrol coming into the GST network because petrol is a cash cow for states and for the center.
are you saying,
I
sir,
don't see
it will never come, or you're saying post-elections it will come, 2024 May?
No,
That's next year.
I don't think there'll be an agreement among the states and the center because you see during the pandemic the states saw their tax decline dramatically and this became one of the cash cows. So they're always worried that they may lose revenue and then they can use it to raise revenue. So I don't see petroleum goods coming. I don't see liquor coming in. And regarding rationalization, none of the states want their collections to go down in any way because they are restricted to 3% of state domestic product as their deficit. So, if the deficit starts going up, they'll have to cut expenditures. And now with so many of the, public services being given and so many of goodies being given by the center and the states, everybody will be short of funds and they'll try and raise more and more resources through some kind of taxation. Otherwise, the fiscal deficit will just go up.
So Professor Kumar, what is the other way that indirect taxes can be brought down? Because I do firmly believe that before 2024 elections, the new government is formed, there wouldn't be any movement forward on the GST. In the interim of about 1 year, if the government wants to address the middle class as a key constituency, as a key political constituency, do you see any steps that you would advise them to do it for the benefit of the common man? Common man in this case is the middle class.
Well, middle class is not the common man because, I think the middle class is 5% of the population and the rest are, maybe 2%
For sake of convenience, sir, 3 of us at least on the panel belong to the middle class.
We belong to the upper middle class, I would say.
I belong to the lower middle class.
Well, we all like to, that's a proverb saying, please come to my poor hut, When you're well off, you say, please come to my poor home, So we always like to say that. But if you look at the national perspective, and if 98% are spending less than 50,000 rupees per month, and this is pre-pandemic, then you can see that all of us, who are in the panel, we are upper middle class, not middle class. And we, of course, have benefited enormously from the stock market rise and other things. And that's why the disparities have been growing up. And as Oxfam report and Credit Suisse report tell us, 1% Indians own more than 50% of the wealth, 10% own more than 75%, and the bottom 50% have only 4% of the wealth. So there are huge disparities, and taxation has to be changed. But the question that was being asked was what to do about the middle class to get the votes. And I think more important than the middle class is the labhartis. The government has created 80 crore labhartis, and their vote is a critical vote, not the middle class vote, as far as I can tell.
Now here we go. That's why I thought that all these 9 years the middle class is silently seeing the spectre from the ground, and but the heartening thing is that labhartis, even if they get benefited, ultimately the India growth story gets a leg up, and if India Inc. gets its due incentive and it plays the game rightly, invests in capex as the economy is rising, I think ultimately all that adds to the growth story, including the deposits in the post office.
The point is, you see, while labhartis get 3 to 4 lakh crores a year, but because of demonetization, GST, NBFC crisis and so on, they're losing 12 lakh crores a year. So the loss in the last 7 years is 84 lakh crores. The gain is only 20 lakh crores. But what happens is that you see the cash coming to you and you don't see the hypothetical loss that is there because of the decline in the unorganized sector. Okay. So I think the unemployment
looks like as of now they're all braving with it. I mean, the Karnataka election results were, again, a very rich state has promised to give so many more benefits. I don't know where it is all leading up to, so long as the votes are coming. Thanks.
Yes.
I think the political parties see that. Political parties see that they have to get the votes and they have to give to these people at the bottom 60% of the population to get their vote. And I think all parties are doing that.
Yeah.
I agree.
All
parties.
In case of Karnataka, even the rich people will get those 5 guarantees.
Absolutely. All parties doing that. There's no one party that you can give a clean chit to, but at this point in time, Professor Arun Kumar, I think we're going to leave it at that. Thanks very much for joining with your inputs on that story.
Okay.
Shweta, just to conclude, last interim budget, so this government does things out of box, not out of convention. So, last interim budget, they made this massive announcement. Normally, interim budgets are a customary, just a fill-in. It's like ticking the box.
That is good.
But I do believe that in Feb of 2024, that's 1st Feb, there might be some more sops for the middle class.
Okay.
because Karnataka results has shown that, you know, not all of middle class, especially the young middle, you know, working executives, they need to be weaned back. So in that sense, possibly some good news.
Some more good news, some more freebies for the middle class expected by February of 2024. That's according to my colleague Rakesh Khar. We're going to shift focus now. The CEO of OpenAI, company responsible for creating artificial intelligence chatbot ChatGPT, said, and I quote, "Regulations of AI is essential." Sam Altman was testifying before a US Senate committee about the possibilities and pitfalls of the new technology. Now, Altman said he supported regulatory guardrails for the technology that would enable the benefits of artificial intelligence while minimizing the harms. He also spoke about the impact of AI that AI could have on economy, including the likelihood that AI technology could replace some jobs, leading to layoffs in certain fields. Now, Altman added that he is very optimistic about how great the job future will be. Joining me at this point in time is Shashi Shekhar Vempati, who's the former CEO of Prasar Bharati. Also joining us is Nandan Mishra, who's the founder of Algo 8. With me is my colleague Amit Ranjan here in the studio. But I'm going to come to you first, Mr. Vempati. It appears that AI now, at this juncture where we are in advanced conversation, AI is being implemented and in possibly every sector, sir, from technology to IT to, we also often talk about how it's going to take away our jobs as journalists. But for the first time, there are fears around AI and the call and need for regulation.
Yeah, so I think what has really changed, because AI has been around for some time now, right? We were all consuming AI in different ways without, really being conscious about it, right? Be it your YouTube recommendation algorithms, the Netflix recommendations, the ads that got served up on your, mobile devices, and so on. What has really changed in the last 6 months is generative AI, and the exponential speed with which generative AI has become so much more smarter and better. And that has kind of created this entire buzz and, of course, the anxieties around it. But still, it has, several ways to go, because AI out of the box, as even Sam Altman in his remarks to the US Senate mentions, it is good at tasks, but it's not really good at, taking over jobs, because generative AI has its limitations, especially you want to do anything which is factual. You realize that, it makes up stuff, it makes up fiction, because these algorithms, these models are designed to create, text. And so they're not, designed with accuracy in mind. They are designed with being creative in mind.
Okay.
So that is a big difference. And hence, regulations, yes, there is a place for it. And I think perhaps the EU is a little further ahead down the road than the US and other countries. But I think we're still a certain distance away to go. I think at this stage, it's perhaps a lot more innovation, to a lot more learning. And at some point, of course, you'll have meaningful regulations coming in as well.
Okay. Before I go to Nandan, I would like to come to Amit here. Amit, there seems to be a call for regulation. I want to understand, what did Altman say? We understand he was appearing before the US Senate committee talking about the pitfalls with AI. But what was his entire contention? What were his arguments?
His big argument was that AI has the potential of going wrong, and not just going wrong, going very wrong. So that is the crux of what he wanted to say, that there have to be very stringent laws. Because if it goes wrong, you do not know how wrong it can go, because it is sourcing its information from almost everything that is available online. So that is the crux of it, and that is why there are laws needed, and there should be laws that should make it easier for people to sue OpenAI, because there are more cases that are filed against OpenAI. The laws will broaden themselves that much more. Right now, we do not know what all AI can do. So the more cases there are, people are able to file against OpenAI, the more laws will be enacted across the board. So that is the imperative thing that needs to be done right now.
Okay. Nandan, I want to come to you at this point in time, someone who's very, very active in the AI space. What sort of laws are we looking at? What sort of regulations are we looking at? We understand it has to be country specific and there has to be some amount of self-regulation as well. But in India specifically, because that's where we operate, that's where you are operating, you've founded a company, Algo8 AI. What sort of laws are we looking at as far as compliance with existing laws is concerned and regulation for AI specifically?
See, if you look at Sam Altman's comments and whatever he has said to the US Senate and whatever he's asking for, see, in the end, once the technology becomes powerful enough, you have to be responsible about using it. And e laws have to come in which have to safeguard the ones who don't have the access to it or create a safe access to the technology. If you look at AI, especially generative AI, there are two major hazards that are there. One is basically disinformation. So by disinformation, I mean information that doesn't exist being brought to you, information being generated from sources which are not should not be accessed by everyone or not fit for you. And second is basically, of course, the jobs. So a lot of workflows will be automated, and it's not going to exactly replace all the jobs, but what you needed three people to do something, you would need one. And this is, I'm saying, for even very complex jobs like even data science, which we do. So AI is going to even not only eat up jobs which are mundane, but also jobs like data scientists who actually created that AI. Even that will be taken up. Okay. So if you look at the type of laws that have to come in, one would be definitely the access to licenses. So when, for example, a particular artificial intelligence has to be consumed by the masses or has to be consumed, say, through a media, it can be a social media, it can be a media house, it can be an internet of things, whatever, wherever some information is being consumed, there will have to be a license that somebody has to go through, and somebody will certify whether this is shareable or not, whether the content through this should be accessible to everyone or not.
Okay.
Now, there we'll have to have a very democratized access to getting such things certified. Because the challenge is that, okay, the Googles and the Facebooks of the world would be able to get those certifications, but a lot of open source labs have to be involved. See, whatever you see today as ChatGPT came out in 2017 with a group of researchers. Actually, it was Vadhani et al. And these people who basically built the first paper out of it. And that's where, AI today you see ChatGPT 5 is. So we cannot kill the open source potential of AI, but at the same time
Right.
we have to safeguard the access
No,
to AI.
absolutely. And we understand that. And in fact, the first sort of a proper law that could be a template or could serve as a template for AI laws across countries, industries, would be the European Union AI Act,
Yes.
the AI Act
Yeah.
that has been proposed by EU at this point in time, which assigns AI usage to three risk categories. And I'll quickly mention them. One, systems that create an unacceptable risk, which will be banned. B, systems that are high risk, that will be regulated. And C, other applications which are left unregulated. Let's talk us through the systems that create unacceptable risks, Nandan.
So unacceptable risks would be, for example, think of it like this, that already we've got a policy called the National Critical Infrastructure Policy in India, which basically, for example, there is a lot of data that is being generated and through the power grids that we have, or the data that we have in our huge operations of our plants, refineries, nuclear plants. Now, this data should not be firstly put on the cloud. Okay, this data should not be made open. So there are policies of housing this data in safe infrastructure. So even if the AI is being trained on this, it will be trained and housed within the systems. I am in fact involved in a lot of such PSUs companies where such critical infrastructure is being, now AI is being used for such critical infrastructure. So
Okay.
at any given risk, this
Are we
cannot be brought out.
talking about putting the data on AI, or and are we also talking about AI application for
No,
sensitive?
both the things, both the
Okay.
things. So it is,
For
see, for
sensitive
example,
tech
think
and
of this.
sensitive
Yeah,
applications, right?
yeah. For example, think of this way, that suppose T Series has made a song, and that song became a hit, and I made that data available to generative AI, and now it came up with 20 new songs which are as big a hit. Now T Series has to regulate that data, whether that data should be made available to AI or not. So that is the part of regulation of data. What data should be exposed to AI and what should not be exposed. The second part is what AI should be exposed to whom. For example, think about it that okay, there might be certain information and knowledge which should be restricted from such certain segments of the society. For example, certain things should not be available post 18. So how do we do that? That is the second category. That
Right.
content generated
Can you
through
give
AI.
us, yes, can you please give us some example of what data should not be exposed to AI at all?
Well, as I told you, yeah, data coming in from your critical infrastructures, be it your power grids, be it your refineries, be it your these plants are actually, these are very, very critical infrastructure. So no data of this should be exposed to any AI on the cloud. This is
Okay.
firstly. That will be a big battle because the cloud players want to access that, and that should be totally not allowed. That's something there. Number one.
Okay,
Number
now then
two,
let me bring
data.
in Mr.
Good.
Vempati also into this conversation.
Sure,
Sir,
sure, sure.
in India-specific parlance, we understand that various countries are of course looking at regulating AI in their own ways, but European Union AI Act serves there as a template to what could be an AI regulation. An interesting three categories that it has devised, and we were talking of course about the systems that create an unacceptable risks and data that should not be exposed to AI at all. In Indian context, sir, how important is a legislation like this? Number one. Number two, what sort of data do you think that AI should be protected from, or should never be on AI, should never be exposed to AI at all?
Yeah. So from an India standpoint, I think legislation is perhaps a little premature. It's early days. In fact, even the minister said something similar a couple of days back as well. However, I think there is a concern. If you look at all these large language models that are out there, be it ChatGPT or be it Bard and so on, the manner in which they have been trained on Indian content, Indian languages, I think is a matter of concern. We need to take a close look at that, and I think that goes back to your previous speaker's comments that there has to be transparency on what kind of training data has gone into these models. So from an India standpoint, that would be something that I would be concerned about. Second is we don't want Indian innovation to be disadvantaged. So we would want our startups to be on an equal footing. So to that extent, our interventions should be less about restriction, but more about how do we catch up, how do we close the gap, and how do we create competitive and compelling AI technologies from India. So that would be, I think, the second focus.
Okay.
Third, in terms of your question of what data should not be exposed, of course, anything which causes harm, right? It could be around defense technology, weapons systems, the critical infrastructure that the gentleman spoke about. So those would be the kinds of things that you would definitely want to restrict. But I think our concern is perhaps less on that front and more on the fact that we have a lot of catching up to do. We have a lot of innovation that needs to happen, which is India centric. And I think our government's intervention should be from that standpoint, that how do we close the gap and how do we ensure that there are large Indian language models that are rooted in Indian content, Indian context, and the manner in which these big models that are out there have been trained on India, I think is something that requires transparency.
Okay. Before I go to my colleague Amit here, I want to understand from you, where do we stand as far as large language models in India is concerned?
That's a great question. I think one is, there is this initiative Bhashini, which is, championed by MIT, and there is Bharat, AI initiative at IIT Madras. So all of them are looking at, India-centric language models. Also, I believe the government is soon going to come up with a big Indian AI initiative where they will open up data sets and so on. I think that's on the annual. So perhaps very soon we'll get a glimpse of where we stand and what is the distance we need to cover from an India standpoint.
Okay, we will of course be keeping an eye on that. Amit, what are the concerns that Silicon Valley has at this point in time, with AI? And we talked about some of these concerns broadly, but if you could run us through the specifics of these concerns, please.
Taking on from what Mr. Vempati said, India is far behind, but the global concerns are a little bit bigger because they've gone ahead, and most of those concerns are directed towards China, given the current climate of hostility. China has been investing very, very big on AI and couple that with basically quantum computing. So there is a potential of what they call crossing the red lines. One red line is basically enabling AI for attacks against satellites, space satellites. Second one is giving access of AI towards nuclear architecture. Now, I mean, you can let your imagination run wild and have images of Chernobyl coming back. The risks remain unexplored. Even right now, only US has said that they are restricting the giving access of AI to target, in military, to target human targets on its own. This only US has said. Who is to say somebody, let's say a North Korea, gives that access? And once things run wild, like I'll go back to Sam Altman's quote, if they go wrong, they can go very, very wrong.
Absolutely.
So that is the second one. Third one is, of course, we have already talked about that deepfake imagery and spreading disinformation. That's the lesser part. Fourth thing is using your weaponry, making AI use your weaponry against yourself, your own people. And that is where quantum computing comes in, which disguises itself. You can't detect it. And that is what China is investing maximum into. So if you do not know that you are being snooped and basically snooped into, and somebody is basically using your system remotely, then you do not know what is happening to your system. And let's say tomorrow, worst case scenario, you press the trigger and the trigger goes somewhere else because somebody else is taking aim. So these are the big military concerns. India is way far behind because we haven't reached that though. So like I said, most of these concerns globally are directed towards China.
Okay.
Because they're investing so much and you don't know how big the ambitions of China are.
Okay. So, Nandan, what kind of investment are we looking at? Because, Mr. Vempati suggested that we're soon going to have a large language model emerging from India. Government is also very, very keen on tapping into this growing market. But as far as advancements is concerned, I remember speaking to you about 4 months ago, 5 months ago, we were still at an initial stage. We were still discussing, ChatGPT kind of momentum that it's picking up. But we're far, far ahead now. We're talking about regulations. We're talking about the repercussions of letting AI run wild without proper, some sort of regulations in place or some sort of, stoppages in place. What are we looking at as far as advancements is concerned at this point in time? It's only been about 4-5 months now.
You see, it's also an opportunistic move by the CEO of OpenAI. I'll be very frank, because what has happened is that now, since the power of AI is kind of demonstrated, and everybody is vouching to build applications and business models on top of it, they want only selective companies and an oligopoly to operate. And that is where they would want a Microsoft, Google, OpenAI to basically lead that. And one of the major harms of bringing in these these restrictions would be killing the open source innovation that has resulted in what we are seeing today. Okay. So I feel that since they have a significant advantage, they want that access to be. They want to build a moat around it. So one of the other perspectives around seeking regulations now is also that I'm saying it here. So that is also there, and sooner or later we will realize that people are trying to build a new age economy and new age business models on top of it. So that is definitely going to happen. In terms of investment, just think of it. So of course, the government of India understands the potential. So today, as we speak, the government of India, through its Department of Science and Technology, already has invested $500 million in building 25 hubs of AI across the country. So we have that. And we have the Ministry of Electronics Information Technology as well.
Absolutely. So money's been set aside, money likely to be spent in the course of coming few months, and developments are happening at a very, very fast pace in the AI space. Shashi Shekhar Vempati, Nandan Mishra, thanks very much, gentlemen, for joining with your inputs.
Thank you.
Moving on, Shein, one of the top Chinese fashion brands, which shut shop in India in June of 2020 after the ban on Chinese apps post Galwan Valley clash, is set to re-enter India in a tie-up with Reliance Retail. The partnership sets the stage for Shein to open both online and offline stores, marking its presence through Reliance's Agio platform. Remember, all of this is attributed to sources, but Shein will be expecting to source its fabric from both global as well as local manufacturing operations if it decides to come back, and the partnership with retail space of Reliance comes through. The partnership is expected to include sourcing, manufacturing and retailing all in all, but also sourcing from India, that could be and would be crucial to marking Shein's presence once again in India after good 2 years. Karthik joining me at this point in time in the studio. Karthik, a good way for a major brand in fashion to re-enter India after it was banned.
A good way or a bad way is something that, we'd leave to the imagination of our audience. But I think what it clearly tells us is this possibility of Chinese companies circumventing the law and making an entry into India. I don't want to sound like a cynic, but I think it is fairly obvious that you raise some investment from India and you source your inputs from India, and lo and behold, you're back in the country. And you're back in the country where we had actually taken that decision to ban Chinese apps and Chinese gaming companies and a lot of other Chinese operations in India, including TikTok. So the point is that yeah, it is making a comeback. For Reliance, it's obviously a great success story, and the kind of brilliant bets that Reliance has continued to make across sectors, from Campa Cola to dairy business to Hamleys to what have you. I think it's an opportune moment given the RGO platform that Reliance has in the online space and Reliance Trends, which it operates offline. Both sort of, attracting the same kind of audience that Shein was up until June 2020 catering to, fast fashion, not expensive, in fact, moderately priced garments and apparel, relatively cheaper as compared to the premium brands. So I think for Reliance, it's obviously an excellent breakthrough. I've been made to understand it's invested about $2 million worth in Shein. And Shein overall, globally, it's a $100 billion worth company. It's a huge magnum opus brand. And it comes back into India for the audience, for the viewers, for the shoppers. Great avenues open. But this whole circuitous route of coming back into India is something that perhaps needs to be guarded in the larger interest.
Because from what it appears, if this is just one retail store, there were many more apps that were banned, which would also then find a way to re-enter India. It's not so much as a bad thing, but a way of circumventing the laws that were put in place post Galwan Valley clash. We'll leave it at that. Thank you, Karthik. Shifting focus to Indian markets now, that snapped its 3-day losing streak amid buying interest in IT, realty and auto counters. At close, Sensex was up 0.48% at 61,729 levels, while Nifty surged 0.41% to close above 18,200 mark. Adani Ports, Adani Enterprises were the top gainers on the back of the fact that Supreme Court committee has, in a way, given clean chit to Adani Group. The Nifty pack was up today, both rising over 3%. Tata Motors, Tech Mahindra and Infosys were also gainers, gaining post their strong earnings sessions today. On the other side, DV Labs fell the most in the Nifty pack. Britannia, Tata Consumer Products, ONGC and NTPC were some of the other major laggards. The broader markets underperformed benchmark, with Nifty Small Cap 100 rising 0.2% and Nifty Mid Cap 100 ending the marginal losses of 0.06%. Among sectoral indices, Nifty IT was the top gainer with gains of 1.47%, followed by Nifty Realty, which was up 0.87%, and Nifty Auto, which surged 0.7% in today's session. And on the other side, pharma counters were also under pressure, with Nifty Pharma falling 1%, Nifty FMCG and Nifty Healthcare also ending the day in the red. And with that, it's a wrap on this edition of Business Plus. Keep watching News 9.